So let's have a look at it. It says question 2, asset disposal, depreciable assets, and we are going to ignore that. The following information was taken from the books of Warrior CC. The two items of equipment featured in the asset register is the only equipment owned by the firm during its existence. So here we have asset 1. It's a chainsaw. It was bought for 11,250 and then it was sold on the 31st of May for 4,736 rand. Okay. Now, what you are given is the dates and the depreciation and the accumulated depreciation for the previous 4 years, and then you have these two little question marks. That is not exactly part of the question that you have to complete on the answer sheet, but you do have to calculate these first before you are able to continue with the question. So as you know, the way we get to accumulated depreciation is you just go and look at the current depreciation and you add that to what had accumulated previously. So here we can see that we are looking for the year end, and we can find it here. Here we see that year end is 31 May. And we see that in 2019, this chainsaw is sold on the 31st of May, which makes it easy because it now means that we don't have to only depreciate it for a number of months in the year. We can depreciate it for the full year because it is sold at the end of the financial year. And then if you look there, I have given you the formula there. Okay. So we take B13. Now B13 was the cost price at which we bought it,
Yeah.
minus E15, which is the accumulated depreciation. And that is how we get to the diminishing value, the reducing balance, the diminishing value of the asset. And then we multiply that with 18% because that is the way we are depreciating it. 18% according to the reducing balance method. So every time we look at the reduced balance, which is the cost price minus the accumulated depreciation, and then we multiply that with 18% to get to the current depreciation, and then of course to get to the accumulated, we just add the current to what had accumulated before. So you understand how I get to these two numbers.
Yes.
Okay. Now, if we look at the other one, it is a new chainsaw that we bought on the 1st of the May. Now, we know, once again, that year end is 31 May. So this chainsaw will only depreciate for 1 month. Again, it is 18%. So in this case, we can, to calculate the current depreciation, we will take the cost price. We will multiply it by 18%. There's no diminishing value yet, it's just the cost price that we have. We'll multiply it with the 18%. That will give us the depreciation for the year, but because we only want it for 1 month, we divide by 12 and multiply by 1. Now, I know, as you know, that when we multiply by 1, we don't have to say it. But obviously, maybe it was 2 months, and I just want you to be able to still use the formula. So because
Okay.
it is 1 month here, I just said divide it by 12, multiply it by 1, and that is how I get the current depreciation and the accumulated depreciation, because it is year one, will be exactly the same. Okay.
Okay.
Uh, so that's the first thing that you have to do is solve these little question marks that is in the question paper. Then they say required. Draw up the following accounts in the general ledger of Warrior CC for the financial year ending 31 May only. Start with the opening balances for the 2019 financial year. Make all necessary entries, including the closing transfer for the 2019 financial year, and balance the account at the end of the month, ignore VAT. And then they give us the 1, 2, 3, 4, 5 ledger accounts that we have to complete. Now we can go and look here what I've done here. So the first one is equipment. Now they didn't
Mm-hmm.
give us the balance, but we actually have it because they tell us here, I'm just going to go back here, that these two assets are the only assets that the company has. Okay. So at the
Yeah.
beginning of the previous year, we only had that one asset. So that is why the balance that was brought down for that one asset is 11,250. Remember, when we talk about equipment, we put the amounts in at the amount which we bought it. This is their book value. Okay, so there we know that it was bought for 11,250 and was the only one we had. It is 11,250. Okay. We also know that on the 1st of May, we bought the new machine for 14,000, and that brings us to 26,110. So then we can say, okay, those two together are
Mm-hmm.
26,110, but we have to consider that we disposed of this asset. And when we dispose of the asset in the equipment part of our ledger, we say uh, we just take it out at the amount which we bought it. Okay, it just doesn't show anymore. So we take it out at that amount, and so it shouldn't surprise us that the only thing we are left with is really the 14,860, which is the value of the new machine when we bought it.
Makes
So,
sense.
so it's a little theoretical exercise. I mean, you know this before you do the ledger account, but obviously we have to do the ledger account. Okay, so and now we know that it's 14,860. And now this is where the challenge came with the vehicle one. It didn't work like this. With the vehicle one, we were removing the asset from a pool of assets, and
Yes.
and which makes it a little bit more difficult. But in this case, there's not a pool. There's only the two. We sell the one change, or we buy a new one, and so we're only sitting with the value of the new one. Okay. Next thing we have to do is the accumulated depreciation for equipment. So once again, we can go back to the previous year, and I said that the balance brought down there is 523320. Where did I get that? Well, if we go and look here, we see that at the end of the previous year, when we only had the one chainsaw, that
Mm-hmm.
was the accumulated depreciation. It's given, and that is why I brought it down.
Okay.
Okay. Then we say, okay, we must add the depreciation for the new year. Now, how did we do that? We said, okay, that's fine. It would be this 1083.2 plus this 222.90. That's the depreciation for the new year. And if we add those two together, like there, we should get 1,305 Rand,
Okay.
which totals to 65312. But then when we dispose of the asset, we need to take out of the books the total accumulated depreciation, which will be that 6316. That is why we had to work it out before we could go on with the question. So there it is. It is taken out. And so therefore it should not be surprised that what we are left with and that we are bringing down to the next year is only the
Mm,
depreciation that accumulated on the new machine. Okay. And if it doesn't work like that, then you know you made a mistake somewhere.
okay.
Okay. So that one is also pretty easy. Then we go and we look at the depreciation account. And what we do now is you will see that this depreciation here is really just the contra account or the contra entry of this entry here. Okay, and that is why we go to depreciation and we say there's the contra. We recorded this under accumulated depreciation. So the only thing we do is we bring that same amount down there, and we are going to account for this in our final results in our profit and loss account, and that is why we bring it in there. Okay. Because really what you want to do is you want to credit the depreciation, but you need an intermediate step. You can't go from there to there, from profit and loss, because then it looks as if your accounting equation isn't balancing. So
Okay.
you first go, you do the contra entry there, and then you balance it in the profit and loss account. And why do you balance it in the profit and loss account? Because at the end of the year, you are zeroing your accounts so that you can actually calculate your owner's equity, and that is why it appears in your profit and loss.
Okay.
Okay.
I see.
Now we go to the asset disposal, much the same here. Under accumulated depreciation, we had asset disposal here. Okay, and we had asset disposal there. So now we have to do something with this asset disposal. Okay, so we in our equipment account, we had the 11,250, so we do the counter entry there in referencing back to that equipment ledger for 11,250. Okay, and then we say, okay, we also have to go and look here at the accumulated depreciation, because when we did the accumulated depreciation, we also had asset disposal there. There it was. Okay. So that's just the contra account for that. But then when we sold that thing, that first chainsaw here, when we sold it for 4,736. So
Mm.
that is an amount that is going into our bank account. Okay, because we sold it.
Yes.
Okay. But now you will see that there is a little amount here that we don't know yet, and we can get in two ways, and I've already calculated it actually. So if we look at the debit side is clearly a little more than the credit side, and so this um, loss on the sale of an asset is the balancing transaction to make it balance. And so we know that we made a loss on the sale of an asset there. Now, obviously, if we make a profit, then it will appear on the debit side, not on the
Mm.
credit side. Now, how can I know that this amount of 197 here is correct? It's something that I did here already, because you will see that if we look at this asset here, we bought it for 11,250. Okay, and by the time we sold it, the accumulated depreciation was 6,316. Now, if I show you that equals that minus that, we get an amount of 4,933. So if I wanted to make a profit, I would have to sell it for more than
Yes.
4,933. But in the
Or you
end,
sell it
now
for
I
less.
only sold it for that amount, which means that I hope this is going to work. I don't know why the offset happened there. That minus this. It doesn't show that as a value. Um, Sorry, that is just because let me. I think it's this one that it doesn't show as a value. So 4736.42. Okay, and I
Mm.
get 19736, and that is the
One nine.
same amount I
Yeah.
got there. Okay, and that's how it should be. Okay, so it should balance in here, and it should have balanced when I did the calculation. So that's just a way to check that my calculation was indeed correct. Okay,
Okay.
so I am happy with the asset disposal. And then the last one that I have to do now is I have to take this loss on the sale, and I have to put this in the profit or the loss account, and I just do that as a contra transaction. Okay. So really, the bottom line is if we do equipment correct and we do accumulated depreciation, correct, and we then just go and we do the contra entries for those, then we will end up with our depreciation and our asset disposal accounts being correct. And then the last thing we just do is we just indicate this profit and loss on the sale of equipment here.